Is December 8th, Friday, and here are the U.S. futures markets. So starting off with the S&P 500 right here, there's a couple things we are looking for right here. One is a retracement trade. So when price eventually comes back down here, we'll look to get in for a retracement trade setup. We are waiting for at least a green semaphore to form right up here. When that happens, see how this one is already closed right there. That is going to signal whenever green one forms. As long as this doesn't, if this candle right here creates a new high, then we'll have to move this over there, and we won't have the in for it. But if the new high doesn't form, we get a green semaphore, then we do have a short setup for this trade right there, and the current target is down here, this yellow line somewhere like that. So that's what we're looking at right here. You can see from today that the so far high of the day, oops, that's not it, has been the extension high levels. You see it off right in between the 1.146 and 1.44. Had resistance, and now it is poking up back in there. So we'll see in the next hour and 40 minutes if this holds and it ends up right here in this area going into the weekend. That'd be my guess is what's going to happen here. But yeah, that's the main trade we're working on. We're looking at if this one turns orange right here, you can see we have red, 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 and they have already after orange. So if that one turns orange right there on the 5-minute chart, then again, then we'll move. We could take a trade, and this one would actually, that'd be the entry for it right there. But we're still just waiting for it to see what's going to happen. So going into next week, if we get a drop, we'll have this retracement trade stuff to look for. And then whenever this thing decides to form, then we'll get some for up here. It could make a new high up there. We just move that over. We'd have a short setup to look for. So we got a couple things in the S&P 500 to look forward to going into next week. Going over here for the Russell 2000. So let me go back to, I'm going to use the current contract December's. What I've started doing is switching them over to like the SP 500. So over to March, you can see it has enough volume in it to make the candle nice and thick. Where if you use the current contract December's, let's know if you go for March, you can see in especially the off hours, it's still a little bit thin for it. So still using December's rather than March, but then next week for sure, we'll be using March's as more people switch over since next Friday, which is 15th, that's when they expire for it. So one of the things I've been looking at right here is for when the price, let me take this off of here right there. So this one is said and done. This one is done. But one thing I have been looking for is when the price goes against you, where's the best way to have the exit? So let me just back it up right here and show you what we're looking at. So this right here, see the orange, red, and have red after orange, and then the orange right there. That is an expanding triangle trade. So what we do, we get the Schiff Pitchfork, put it on points 2, 3, and 4. And we wait for price to close below the median line. So that happened right here on this candle right there. So that is the entry point. That signal to us that the exit we're looking for is somewhere along or very close to this yellow line right there. So that's what we're looking for. Now, obviously that didn't happen. Price now come down and I hit it. So when price goes up and hits it the other way, the Schiff Pitchfork, what we do now is, or the way I trade this is what happens is then you move the exit to just above like the entry point. So the entry point is right there. So I've been moving it up, just kind of guesstimating, like say somewhere like right in there would be a good point for it. But what I was looking for is something more concrete for it. So I started looking at what if you take the low from the movement from 0.3, which is you basically just take the movement from 0.3 to 0.4. And put this up here to show you something else here real quick. So what if you take, well, okay, let me back up. So it hit up here. So this is one area you can't get in. And then you can see from up here, the 1.4 and 4 from the points 3 to 4 move right there. You see there's the 1.4 and 4 level. I will just move this to right there. You see that? That also seems to be kind of the high level or low if you're going long for it. But like for this instance, it's, it's a short. That's another area you can get in because the 1.4 and 4 level seems to be kind of like the upper level of where the price is going to go, where it's going to come back down from. So So when it hits the yellow line going the opposite way right here, and that's where it signals, okay, we need to move the exit closer to where the entry is and not to where it is down here. So instead of me just guesstimating where I think the exit should be, which I have been doing, I said, what if there's a better way, more concrete way to do it? So what I've been looking at is having let's take that out, 0.146. So using the 0.146 retracement level, you can see with that purple line right there. See that right there? Let me take all this other stuff off to make it, come on. Make it easier to see right there. Why is that? I don't want that on there either. There we go. So here, the black line right there, that shows where the entry point is, that candle close. Here is from points 3 to 4, right here, 3 to 4, the 0.146 line from it. So when it hits the upper end, I think this may be where the exit is going to be right here, the 0.146 level, because it is just north of where the entry is, which has been pretty much where the safe point for an exit is when price goes against it. It doesn't go down there, hit the original target. So using points, and so I made a little note for it over here. So using points 3 to 4 and the retracement, the 0.146. You can see it went up there, hit the top line, also hit the 1.414 extension level up here, and that was kind of the high for it. And then came back down. I got out right here. I was actually in this trade earlier today. It's 1885.20 and got out 1872.40. So I didn't take it all the way down there because I'm still testing it out. But if I had, would have gone out just north of it, just north of it. Make sure you get out a tick or two, a couple early for it, but could take it to about 1868.6 or so, or something like that. So could have gotten out about almost 4 points better for it. So I think that is going to be the exit that I am going to look for and really test moving forward when price goes against it. So really, I think the 0 point, in fact, you know, I'm going to save this as 0. Let's see, tracement, target, other way. All right. I don't know if that really makes much sense. Daily retracement target, other way. Yeah, I probably shouldn't call it retracement target. Oh, we'll just leave it. I don't know what it means. So I think that's going to be the exit we're looking for. You can see down there, hit it, and now it's taken off since then. So this trade is said and done. So go ahead and take all that off. Just want to explain that for this video and for myself. If I go back and watch this. So then all we're waiting on right here, we do have another expanding triangle trade. We just don't have a green semaphore up here because here we have one right here. You can see this one is one right here and another expanding trade right here for the Russell 2000. See 1, 2, 3, 4. So we just take the Schiff Pitchfork right here, 2, 3, 4. 1, 2, 3. 1, 2, 3. There's the fourth one, but pretty much closed right on it for a long trade. So that was a terrible one. But then we have another one right here. 1, 2, 3. We don't have a fourth one created yet. So what we can do is we can do 2, 3, 4, just like that. So 1, 2, 3, and here's the potential fourth point. So when we get a green semaphore up here, let's see if the 5-minute chart has anything. 5-minute chart does have one on it, so the hopefully get a green one here pretty soon. If we do, then the target will be still down here at the there would be the potential entry candle right there. And there's the target, and here for the optimal entry, what I look to do is retracement trade. There we go. It would be just right about here. That'd be what I've seen, the optimal kind of entry set up to get in. And then if price for some reason does go way up here, we are looking at, there's the 1.414, down a little bit right there. And then finally, if the price does go all the way up there, that would be the potential the other way. Now, this is kind of high, So that's when I'm not sure if that would exactly be it. I mean, maybe you just do that. But if we go back here, and I'll look at that later for it, but that could be potentially it. But that's kind of a lot the other way, as you can see right there. But anyways, neither here nor there because it's not validated yet. We have to wait for this thing to turn green for it. So that's what we are looking for the Russell. Going over to the Dow Jones. This is still, okay, we got a couple things going on right here right now. So let's take this off of here. We don't need that on there. So we have a long setup right here, expanding triangle, 0, 1, 2, 3, 4. There's the higher high, lower low, price closed above it. That is signal to go long. The optimal entry, if you take points 3 to where the candle is, which is actually going to be this one because that's actually higher than that one right there. But anyways, that's not what I wanted. I wanted that one. Optimal entry is down here at the 50. This is me waiting to try to get in on it, but that's not going to happen today. So take it. So missed it earlier. You know, you would have taken it easy at the 50. The ultimate exit is up here at the yellow line, but if you had taken it just a move to the 1.146 or 1.414, you're looking at a really, really nice gain right there. Never came back down to the 50 again, but still, you're still looking at, if you take 1.146 within that move, 114 ticks and about 160 ticks right there, but now it's pushing up against the highs of the day. So I expect it, you know, if it doesn't do it today, going into Monday, sending it open, going into Monday, going up there, hitting that and completing that long trade for it right there. Going over to oil right here. We have a really nice potential long-term setup, expanding triangle trade. You can see there's the 1, 2, high, 3, lower, low, 4. So when price closes above this one right here, the median line right here, that's the signal to go long. And the target we will be looking for will be this yellow line right up here. So it's going down. So the more time that goes, less the profit. But, you know, say about 76, 78, you know, slide scale down all the way to low 76s, stuff like that for it. But with price currently at 71.37, if we do get it close, say over here at, you know, 72.5, we are looking at a, probably if it goes up there, you know, good $3.50 gain for oil. So going into next week, oil could have a nice move up because, you know, from the past 1, 2, 3, 4, 5, 6 days, it has been going down all the way from the highs of 79.67 down to lows of 69.09. So a $10 decrease in the last 1, 2, 3, 4, 5, 6 days. For today's the first day it has been up, as you can see right here. So, but here's the way it goes. So this is how one thing to look for, how I do it, looking at the trends. So we just draw kind of a crude trend channel for it. So there we see it's clearly, easily in a downtrend, but now look at this is breaking out of the potential downtrend channel. So we can just mark it really easy, say there's kind of like the lows, there's kind of has been highs. I mean, you could even take it up there, but we'll say that as the highs. So it's kind of breaking, it's had consolidation or basing pattern, whatever you want. So when you have, you know, a downtrend, it goes from down to basing or consolidation. And then from there, once you get that, then it has to go one of two ways. It's either you're going to go and get it start uptrend going back up, or it's going to continue in this downtrend going back down. But from what this is looking like right here, that looks like we are breaking out this consolidation pattern to the upside. It looks like now we are forming a pattern going here, a trend going here to the upside. So if that is going to be the case, let's say that is the, let's say these are, or would this be it? Oh, it's pretty good right there. And we'll just pull it down here. That could be the potential trend channel going up. Not say it is, and if it is, you know, the target we look for to be somewhere over here at around 75, anywhere from 75.5 to about, you know, the low 75s to it. You know, if this is going to be the trend channel going up, but that's what it's looking like is, so we have the downward channel going to the consolidation. Now it's breaking out consolidation. It looks like it's creating the trend channel going higher. So this is, if this is the trend channel, it is going higher. That's the target we're looking for between going into next week, between the halfway, 75.5 down to about 75 towards it. So that's where we are right now. We're in a consolidation pattern, but it looks like it's creating a trend channel going here to the upside. So that's the target we have. Going down to the freaking Nasdaq, because this one broke my heart today. So this is a retracement trade. We have them down there right there. So going right here, what this is it's a triangle trade. So there's high, there's low, lower high, higher low. So there we go. Points 3 and 4 are within points 1 and 2. So that's triangle trade. So when that happens in points 2, 3, and 4, you put the inside pitchfork on them. And when the price breaks out the purple line right there, which is this bar signified by the black line, that's where the go long, the entry bar is right there. Now, what I like to do rather than just getting in for it, because yes, occasionally you will miss it when price closes above it, it just skyrockets off, goes and hits a target and it's done. Yeah, you missed on a great trade. But what I like to do is take from the low of the move, which is typically 0.4 from 0.2, typically take from the low of the triangle to the candle that it broke out at, which is typically going to be high from that move. So you do the Fibonacci point to the high, to the low, which is 0.2. Then you have your entry right here at the 50% line. Now, I literally had mine right there at the 50% line. It was at, if you look, I did a stream this morning, and if you look at that one, you'll see there, I had my entry at, let's see, the low of this is 15,890. I had my entry at 15,898.75. So I had it right there. That's where my entry was, 15,809.75, and it went down all the way to 15,890. So 89 points. So I missed it by one tick from getting filled right here. So, missed it from getting filled and missed an easy before I would have really even been, thinking about getting out right here. So 156, 200 plus points on the Nasdaq for an easy trade, but that's the way it goes sometimes in trading, man. That's the way it goes. So price easily went up, hit the 1.146 from that move, which doesn't mean the trade is over. I mean, we're still looking at the trade going up here, hitting the green line. That is the target for this move right here, but it's just area they're getting out. But really, the ultimate area getting out is the 1.414 area. So if I was in right there, kept it right there, you're looking at 216. If you hold it to the 414, it's 300 point move right there. So I mean, man, because like, look, if you take that, you're looking at $600 move right there, and that's just a micro contract. You're trading one. Let's see, like right here, for instance, taking right there, $431. Like, well, we can put it back right there. So there it is right there. Take it up to 1.1416, 1.146, 422. Take it up to 4 $600 trade. That again, that's one micro contract. You're doing just one regular contract right there. That's $6,000 right there. So that'd be an awesome way in the week. That's what I hope to get up to one day doing that. But it's the way trading goes sometimes. I mean, it does reinforce the fact that I do believe that way, looking forward to be more patient for the entries back down to the 50% from that low of the move up to where the entry bar is the way to go. Get you a better price. And if the price does go against you, you don't have to get out right away. Because again, if like the price the other way, potentially, if that is going to be it the other way, like say the price broke out and went all the way down here to the green line, then what that signifies is we move the target from the top of the green line down to the 1.146 level the other way, which would be right there, that purple line right there. But that did not happen. So we are still just, that's the target up here going into next week. So there's still room to run here for the Nasdaq market for it. One thing it did do, though, it did create from this point right here. Change that first to retracement trade. You can see from right there, went down easily, hit the 50, went up there and hit the 1.146 right here. So when it does that, that's the ABCD move. So A, B, C, D right up there. So when that happens, we just change it to retracement set. And now we're waiting on price to come back down here. When it hits the 50, that will signal, that's where you get in for, this will be a really nice scalp. getting in for Nasdaq and taking it up. So we do have a scalping trade to look for. Price comes back there, but going into next week, unless something drastically changes and the market really pops off here going into the end of the day, we'll look going into Monday, looking at more upside in the Nasdaq market. Let's see, that's Monday. Yeah, so it could be another going into Monday about at least a percentage point gain before it hits that target right up there. Bitcoin. So here's Bitcoin from today. We do have a Inside Pitchfork trade, triangle trade. So there's the high, low, lower high, higher low. Points 3 or 4 are within points 1 and 2. So we just easily put that on, put that on, put that on, and lo and behold, look what happens. Price breaks above it. There's the entry point right there. Never comes back down. So for like the optimal entry is what I call it, which would have been right there. It obviously never even gets down closer to there, but did go up real easily and get the exit for over a percentage point and about $500 right there for the daily trade for Bitcoin. And so that one's done. We go to the longer time frame here. We're still very bullish on Bitcoin. It's currently at, you can totally tell from right here. Like I showed in the other one, here we have, let's see, we'll do the downtrend. There's the downtrend. Here we clearly have a kind of basing pattern right there, consolidation pattern. There it is, consolidate, not breaking out, using that support. Now we have a clear uptrend channel for Bitcoin. And let's see which ones we want to use. That look good. I mean, who knows exactly where it is. That could be good right there. But it went so downtrend to consolidation. Now we are in an uptrend channel. Just they're subjective in how you draw them, but just want to show that it is in an uptrend. That's how it goes. So then eventually Bitcoin will hit a consolidation. Who knows, maybe up here, maybe higher, maybe lower. And then we'll just have to see if we will continue the uptrend going up by that consolidation or go into a downtrend. But we are for sure in Bitcoin in a nice uptrend channel right now. Let's see. Low to that one. I mean, I don't think that's it right there, but it could be. I mean, that could be it right there. I don't know. Typically, like doing it, if you're doing an uptrend, you measure it from the tops of it. So maybe that's it. Maybe that's the downtrend. Maybe something like that. I don't know. But it's in an uptrend. That's the bottom line. So anyways, that is it going into tomorrow. I mean, there's going on a little over an hour left in the trading, so not a whole lot going on. But anyways, take care out there. Talk later. Thanks. Bye.